Hello, everyone. Welcome to Switch Markets and How to Trade. I'm Shane Vernier, and this is the 5813 EMA Crossover Strategy Workshop. Today, we're going to show you how to get set up and rolling with the 5813. I'm going to answer any and all questions in due time. We're going to try to place a few trades here live. So this is going to be more of a webinar type of a style of format. I will answer as many questions as I possibly can. We do have quite a bit to get through, though, to set up this strategy and really show you how to trade it. Also, if you have any questions for a specific market, we're going to go ahead and hold those until the end, and then I'll go through and I'll give you my own personal opinion on really anything you want, any market-wise. We'll throw some Fibonacci's up there, and I'll show you my approach to the markets. But the 5813 can be a very good way to trade. It's one of our more popular strategies, and I'll show you exactly where to find the video, and we're going to give you as much instruction here as we can. So good to see everybody back. There's a lot of folks here today, and that's absolutely fantastic. Let's see. Kuram, good to see you. Kuram Patrick, good evening. Good evening to you too. Kabitsby, hello, family. We're on a lesson. Yep, we're going to have a family lesson today. It's a good way of thinking about it, everybody. Nice global community here. A lot of positivity. If there's any critiques, be sure to throw them out there too. I don't mind being critiqued either. That doesn't bother me even a little bit. Let's see. T. Marina, good to see you. T. Yes, sir. Good to see you. Yes, sir. Joshua. Lornetta, I would love to know how to trade. I've been trying unsuccessfully. Thanks. Well, we're going to show you a strategy here today that can get you up and running with a little bit of confidence. We're going to go with the 5813 on short time frames. I know most of you love trading short time frames. I'm not a big fan of it, but it can be very, very good. Also, we're going to show you how to set this up on TradingView and MT5, and then we're going to go ahead and make some live trades after we get all the rules. And on ultra short time frames, we're going to introduce something called confirmation. We're going to use the relative strength index for that. That's my go-to confirmation tool. I'm going to explain all that in due time as well. Let's see. Tina Jing, good to see you. Tina, welcome. All right, everybody. Happy Friday. Happy Friday, everybody. Yeah, it seems like just yesterday it was Monday, and now it's Friday. The weeks are passing by. They're flying by this time of year. Sometimes the markets get very dull, and I have a feeling, under the Trump administration, there ain't nothing going to be dull. Today's the big deadline for the Russia-Ukraine peace deal. We don't know what's going to happen. Bobby Bob, good to see you. Tuku, welcome. Alan, good to see you. Lita, Steve Francis, Dave F19, always a pleasure, guys. Okay, let's get rolling here. The name of this live stream is going to be the 5813 scalping strategy. And what this is it's a very basic trading strategy that is actually a little bit more involved than you would think. You think crossover strategies, you're like, that's pretty simple, Shane. That's pretty basic. Yes, that's one of the rules of these live streams. As simple as good. Makes money, it's the right answer. Simple as good. And if I don't know, I'm not going to BS you and waste your time. Right here, 5813, pretty darn good on small time frames. I love it on the Forex. I love the 4-hour chart on the Forex. 30-minute chart is also another good one during really peak participation hours, and that's usually during that London U.S. overlap. You definitely want to be looking at it during those periods. So we want market depth, volatility, and really just the conditions to get us a move. Because if we don't get a move, then we're gonna be in a bit of trouble, and we don't want that. All right, everybody, you can find this full video over on the How to Trade Com YouTube channel. We have a bunch. There's one how to improve our orb entries. That one dropped Tuesday. I'm getting a lot of great feedback on that one, and there's all sorts of topics in here. We've been doing these videos for quite some time now. You got the Forex orb. That's another popular one. 3 times not to trade EMA crossover strategies. That's a good one. And then right there, your 5813 EMA strategy. That's where it is. Made it about 5 months ago. Got about 20,000 views. So feel free to get in there. It's only 4.5 minutes long. So if you want the quick and dirty on this, go ahead, cruise over there, check out the video, and we'll get you up and running with it quickly. And there's a lot of content there, guys. So be sure that you check that channel out. Like, subscribe, do whatever you like, but just there's a lot of strategy there. So to sort of get back to Lornetta, I would love to know how to trade. Been trying unsuccessfully. Well, there's a lot of strategy over there. There's also a lot of things, I don't know, I call them pro tips, I guess. You could call them pro tips, but there's a lot of things in there that maybe you don't know about: compound and interest, the power of a trading journal, accountability, all those things. All those things are pretty good. So let's go ahead and get started with the webinar. First things first, though, I gotta sort of take a look at this trade. This is our gold 920 EMA crossover. For those of you that always join us, and we've been monitoring this trade, I got a feeling we're going to go to 3,500, and I think this signal right here, barring something very serious, I think that this buy signal right there is going to give us an opportunity to test that 3,500 level. We are going to be all over gold next week. A lot going on next week. We didn't have much of a trading, really a news cycle this week. That gold market is front and center for me. I'm watching it very, very closely here. All right, everybody. Good morning. Quick and dirty. Yeah, about 4.5 minutes, Tina. 4.5 minutes. That is about as quick as I can get through this stuff. We're probably going to be here for about an hour or so today. All right, XAU. Yeah, hey, Mew. I'll cover gold right at the end. I'll cover gold right at the end of this stream. All right, guys. Here we go. This is webinar style 5813. Strategy rules. We always start with our rules. What are rules? Rules are what govern our entries and our exits. Now, our exits are probably the most important thing. Our entry is relatively straightforward. Once you master the entry of the 5813, then it's going to be all about you building risk versus rewards and understanding where your stop losses need to be. I'm going to really focus on the second part of that, the stop loss. If your trade does not have a stop loss, you're in big trouble. If you do not know where you need to get out of the market, you're in big trouble. And if you don't know how to set a stop loss, you're in big trouble. So we're going to go through that as well. Rules are easy, guys. When the 5 EMA crosses over the 8 EMA, we're going to look to trade. That's our qualifier. When the 5 crosses over the 8, we're going to get in there and look to trade. Now, sort of a filter, a built-in filter. Price must be above all 3 EMAs for us to enter the market to the buy, and it must be below all 3 EMAs for us to sell. All right? Now, when do we buy or sell? On the first bar close after the crossover. All right, let's go ahead and get you set up on TradingView and MT5. You'll see exactly how this works. It sort of helps just to do this in real time. So right here, we've got a US 500 5-minute chart. What we're going to do is we're going to go to our indicators. We're going to hit indicators. We're going to go down to moving average, and it should be right down in here. I like this functionality. Moving average exponential is what we want. Remember, EMA, exponential moving average. Why are we choosing an exponential moving average? Because an exponential moving average weights the most recent pricing data more than the distant pricing data. A simple moving average weights all the pricing data the same according to your period. So if you've got like a 13 or a 15 SMA, it's going to weight all those candles the same, all right? But an EMA, it weighs the most recent price action. It puts more emphasis on that. That is absolutely huge. Absolutely huge. You want to be sure that you understand that. That's why we do the EMA, is to be as current as we can be. So we're going to go ahead and give that a click. We're going to go ahead and give it another click and a third click. You'll notice that we just populated with 3 EMAs. Okay, so essentially what we've got here is our basic default settings is at a 9, right? So what we're going to do here is we're going to take our first EMA. We're going to base it on the source, which is the close. Keep this as easy as possible. Our length is 5. That means we're going to go back 5 price bars. What are we going to do here? By style, I like it to be red. I like my first one to be red. And the reason why is that tells me that we're in the game and we're ready to go. That's sort of my trigger. That's the hot one. I always call the short one the hot one. So the 5 EMA is hot. All right. Now, the second one, you're going to go with your 8 EMA. You go right there to inputs. You're going to change your length to 8, just like that. Based on the close, your style, you're going to go here. Blue is just fine with me. I like the lines a little bit thicker. I like them a little bit thicker just so I can see them and they show it better on these live streams here. Let's go ahead and close that down so we can sort of focus. And then we don't go to indicators here. We go right back down to our third indicator. We've already added it. Hit settings. You're going to go here. Purple's fine with me. I'm not picky, but I do want the line a little bit thicker, and that's my 13-period EMA. All right, 13-period EMA. We'll talk about that one in a minute. That's my favorite. That's my own personal bread and butter. That's what I like. Let me see. Stats video. Good to see you. Where are you from? I'm from living up in Dillon, Montana. I'm a native Montanan. I'm from the United States. That's for sure. Lebo gang, happy to be here. Good to see you, Lebo. And yeah, we'll get to gold sort of at the end. I'll give you my view. I'm on gold at the end of the stream. So that's how you get set up on TradingView. So let's go right over here. Let's hit your MT5 platform. I know a lot of you are with Switch Markets, the Switch Markets community. Remember, if you want to trade any of these strategies or any of these things, you're going to want to go over there to your Switch Markets portal there. If we're still on the 9, yeah, I'll get back to it in a second, Alan. I'm not too worried about it, but you change it to 13, and that'll give you a better look at it. Okay, so on MT5, go to Insert, go to Indicator, go to Trend. All right, once you're on Trend, you're going to go down, and you're going to hit your moving average, which is right in here somewhere. Moving average, give it a click, and what do you got right there? You've got to adjust your period, number 1, so 5. Exponential, make sure that your method is exponential, and you're going to go ahead and add that to your pricing chart, and you're going to go up here to insert again, indicators, trend, and you're going to go down to moving average. You're going to hit it again, and you're going to go to 8. You're going to put up an 8. Then you're going to go down here, change that from red, and you can pick any colors you want. Just make sure that you can easily look at them and remember what color your EMA is. So there's the 5 and the 8. All right, and then let's do it one more time. Insert, indicators, trend. trend down to moving average, and what you've got here is 13. So go ahead and change that to 13 exponential, and let's go ahead and we'll just rock sort of a, I don't know, a medium. Nah, we don't want it to be blue. We need it to be like a discerning number. I like purple. Where's my purples at? Medium blue. We need a purple. All right, let's go with dark blue. That one will work there. Okay, let's go ahead and do that. Almost like a black line. That's just fine. So there it is. That's how you get set up on TradingView and MT4. Let's go back, and we'll go ahead and fix my mistake here, which we got left it at 9. Don't do that. Make sure, double check. You got to make sure that these are the right settings. All right, 13 on the close, and okay. There you go. So that is going to be what we're looking at. Now you can see we have 3 moving averages on our chart, and what we're looking for is crossovers. Okay, so when we get, say, a crossover, we're going to look to buy it. All right, when we get a cross under, we're going to look to sell it. Now let's go back and review our rules one more time, and then we're going to go hunting for some trades. All right, what are our rules? When the 5 crosses over the 8, we're going to look to trade. So right here, this is a great example. Let's just go ahead and highlight this right here. You can see that the 5 is our red EMA. It crosses up over our 8. All right. On this bar close right there, that bar is going to represent your first bar after your crossover. The crossover started here. It's complete on that bar close. Now you're looking to buy. So that's going to be your buy signal, number 1. Can you take that trade? 5 over the 8, right there. Price must be above all 3 moving averages. Means it must be above all 3 of these. Okay? Is it? Right there. Absolutely. So that's going to be your buy. Now here's where things get sort of tricky. All right? When we're setting stop losses, when we're setting profit targets, we've got to understand a couple of things. We've either got to understand risk versus reward. We've also got to understand what it is to set a stop loss. Let's start with a stop loss. I always like to reverse engineer these things, know where I have to get out before I have to get out. All right. Stop loss should be one of 2 places. And I'm going to give you my personal favorite right here. My stop loss, especially on something like a 5-minute chart, I love swing highs and swing lows. Love them. There's your stop loss location, right? That's a great stop loss right down beneath market structure. Wrong. You can't put the stop loss right on the bottom. You cannot put your stop loss 1 tick beneath that swing high or swing low. You can't do it. You absolutely can't do that. What you've got to do is you've got to pad that a little bit. Pad it a few ticks. Now, it depends on what you're trading. If you're trading a Forex pair, say on like a 5-minute chart, at least pad it by 2 pips or maybe 3 pips. If you're trading one of these more volatile instruments like the US 500 or a US 100, give it a little bit of room. Give it a little bit of room. So maybe a few points, maybe 1 or 2 points, maybe 10 ticks, something like that. But a basic guideline. You cannot put your stop loss right there beneath market structure and expect that to work for you. You've got to pad it a little bit because inevitably what you see is stop hunting. Let's say this market traded down after our buy. We're long here. We're looking for a price to rise. Let's say it traded down. More times than not, you're going to see that market structure probably get triggered by a tick and then at least rebound a little bit. You'll see it right in there. It happens over and over and over and over again. And you have to make sure that you don't just get stopped out by a tick before the market bounces back. You absolutely can't do that. So let's get rid of all this stuff. So when we're setting our stop loss, swing highs and swing lows, I love those. Absolutely love them. It's sort of, you pad it a few pips. Make sure that you make the market prove itself down there before you bail out of it. But there's another way you could set your stop loss. We've identified our entry. It's going to be the first bar right after our crossover, okay? Where could your next stop loss be? You could put it right beneath that bar. Is that okay? Yeah, it's okay. Will it work for you? You're going to lose a lot of trades, but the beauty, at least right here, you can sort of see in hindsight, the beauty of having your stop loss there is you've already got paid off on your runner. So it's a question of how tight do you want to trade this. Now, if we were scalping, for real scalping, I would say you could definitely put it right up there underneath your price bar, 5-minute chart, something like that. You definitely could do that. Now, if you were more of a day trading approach, let's say you wanted a true day trade, then you could easily be doing something like this where you put the stop loss beneath the swing high or the swing low. That's up to you. That's one of the great things about this strategy is its flexibility. So you definitely want to be aware of that. I think that gives you a lot of opportunity to dial in this strategy for what you want to do, what your goals are. All right. So a 5-minute chart right here. So let's go ahead and pick a Forex pair, not just this US 500. So let's go to Great Britain Pound USD. We've been on the move lately. 5-minute chart, you can see how wicky this is. Sort of a difficult thing to trade on a 5-minute chart. The reason why the wicks are sort of as long as they are, you're starting to see a lot of dojis show up. I don't believe there's as much participation in there as there was, say, a few hours ago. Right in here, I mean, these are fantastic price bars, and you can see there's a tremendous number of trades. Now, one of the biggest challenges with this market is when it flattens out and you start to see a lot of crossovers. I call that the weave. You got to be very careful with the weave. The weave can get you. There's a couple of ways to avoid getting caught up in those choppy markets. One of them's confirmation, and the other one's to adjust your time frame. All right. So let's just place a trade right now, though. What I want to do is I want to place a trade. I want to see if we can get in and maybe find a trade, something that's volatile right here that we potentially could get in with no confirmation or anything. Let's just wait. Let's just see if we can find a trade. Okay. What do we have here? All right. Potentially we could have been running a short right from there. Crossover, and just to blow this up, crossover right here. This is a 5-minute chart on the NASDAQ futures. Your crossover occurred right there. 5 crossed over the 8, and price was actually beneath all 3 right there. So you could have got your sell probably right in this zone right in here. Now, what do we want to do with that type of trade? Clearly you want to get in, but how do you get in? How do you trade it? You've got to go to a market order, and you've got to do it right on the bar close. So in order to illustrate this point, we're going to take the price way down. We're going to take it down to a 15-second chart. I do not recommend this. This is for instructional purposes only. No confirmation, no nothing. What we're looking to do here is we want to get a crossover. We're looking for that 5, which is our red one. We want the red one to cross the blue one and price to be above all 3 moving averages. If that happens, then we're looking to buy the market. Why? Because the bearish price action will have ceased, and we're looking to get long and sort of play a rebound. 15-second chart, no confirmation. This is as dangerous as trading gets. I see people doing this on YouTube, and a lot of folks follow them, and they like this kind of trading. I will tell you, without any confirmation device, you're in trouble trying to do this. This is a very, very delicate procedure, and it's hard. Taking this many trades in a day is hard. Now, right now, what are we looking at? Okay, our crossover is really brewing here. Our crossover is really starting to brew. All right, now we're in position maybe in the next couple of pips or next couple of ticks where we're going to get our crossover and potentially get our close up above that 13 EMA. Now, we're not quite there yet, and it's important that you wait. You've got to wait until you get the crossover. If you do not get the crossover, you cannot trade this strategy. We'll get it here in a second. Now, once we get the crossover, once the red one crosses the blue one, the 5 crosses over the 8, and price closes above all 3, then we can take the trade. When we take the trade, it's going to be a buy order and it's going to be a market order, okay? That buy market order, we're going to go ahead and send them long right on the bar close. First bar close after the crossover. So if we get a big rally, I mean, you can see how touchy this is on this time frame. Now, what we're looking to do here is we want to get the crossover. When we get it, next bar after, once it's official, then we jump in the market, set our stop losses and our profit targets. It's that simple. Look at this market's really coming off now. It looks like we may be waiting a while just to try to get a trade on a 15-second trade. All right, we're going to give it a couple more price bars, and then I'm going to have to maybe go to a different time frame or find something else to do, and we'll at least introduce confirmation. So there's the market. Here's the market. Okay, there's a big move. We're still waiting on our crossover. We're not getting it. We're not getting it. So we've got to go do something else here. I'm not going to sit here and wait around all day just so we can execute a trade to show you guys what it looks like. But you do need to see it. You need to see the way that this is going to work. That's really what brings it all home. 15. I mean, you're starting to see the crossover, but you're still going to have to get price to really rally. Right here, I thought we had it. We just didn't quite get the cross. This could take all day. I'm going to give it one more price bar to get us close. And then after that, we're going to have to go do something else. I get bored, guys. I get bored quick. All right, yeah, we're not going to get it. Okay, let's go ahead and pick another market here. Let's see if we can get something. Maybe the EMA Dow 15-second chart. All right, let's go right here. Okay, right here, we've got a potential for our market order to come into play. I want everybody really to look and see exactly what we're doing. Now, this is a potential buy order. Why is it? Because we're getting that crossover. We haven't crossed over yet. We've got to wait. But maybe the next bar. Okay, if we get the trade, if we get this market to sort of trade up above this level, then we'll have an opportunity maybe to get long. So right here, we're sort of in the queue. We're in the queue. We're ready. Fingers on the trigger. We're ready to shoot, and we're just not seeing it right here. We're not seeing the action. The action just isn't there. We're not moving enough. All right, there's a gap up. You can see the volumes just isn't really there on these charts. I mean, you can see there's just not enough trades really, and we're getting some tremendous lag on my charting thing too as well. So, okay, right here, bang. Is it time to trade it yet? No, you've got to wait for that close. Right there, your crossover's brewing. Right at the end of this bar, we're going to go ahead and send them long. Okay, 2, 1. Okay, bang. We're going to go ahead and send it, and we're long. All right, there's the crossover right there. You can see the next trade was right in this zone right in here. So now we're officially long. Where should my stop loss be? I have two options. Number one, I could put it right there beneath my trigger bar. Number two, I could put it down here. We're working a 15-second chart. I'm going to go ahead and do this, and you can see prices exploded in our favor. All right, so we went long at 44,257. Right there, our loss is down there at 44,245. So we're only looking for 12 points for a 1-to-1. If you want to stick in there and try to get some more, you can, but we've already made our profits on it. I mean, that's the reality of it. So there was our entry point. Right there was our crossover. Price closed above all three moving averages, and now we're up and away, and we're making bank. There you go, right there, 260. I'm going to go ahead and close it out. We closed out right up there at 44,268. So let's go ahead and review that trade and the results. There was 44,268. That was our profit. That's what we took on it. Our stop loss was down there at 44,245, and our entry point, I believe, was right here. Somewhere, well, it was right there, actually. Crossover was on that bar, where as soon as we got the bar closed and everything closed above all three, that was your long. So 44,258 to 68, that was a little bit of slippage. We could have easily got a little bit more there for our 1-to-1. Our 1-to-1 would have been right up here. And if you wanted to wait around for a 1-to-2 or a 1-to-3, you certainly could have done that. Or if you're a smart money trader, you could have just looked at the top of this 15-second market structure and said, okay, I'm holding out for 44,278. Okay, so that's a pretty good look at what a trade looks like. Now, I'm not telling anybody to trade a 15-second chart. All right? Now, let's introduce the concept of confirmation, and let's see if we can go in on the prowl for maybe a more realistic trade, something that's going to give us I hate to say realistic because we just made a bunch of money on demo. These are demo trades, and there you go. Boom. Now you got the big breakout. I mean, this is a tremendous runner. I mean, you got in on a runner. There you go. But we're going to talk about confirmation and how the RSI can really help you stay out of areas like this that are really difficult to make any money out of. Way behind on the live chat, guys. Go ahead and give me a second, and I'll answer your questions here. Okay, good to see you. Hurst Horns, good to see you. All right, hey, Mew, Shane, please change the 9 EMA to the 13. Yeah, guys, I saw it. I caught it a little bit late. I apologize. I get going fast. I start talking fast and thinking fast, and I forget the little things. But thank you, Alan, for pointing that out, and thank you, Haymo. No, we're all locked and loaded here. That was a 5-8-13, so we're good to go there. Watching from Kenya, set and forget traders. Glad to be here. Always welcome, guys. From anywhere on the globe. I'm actually going to have a chance to go overseas to Europe in September. I'm looking forward to it. I've never been down to Greece, and I'm looking forward to it. I don't know what to expect. I'm going to have to get some different clothes, I think. I usually wear my cowboy boots and jeans around. I don't know that works in Europe, but I don't know. We'll see soon enough. Let me see. Hurst Horns, I'm scalping short, trading the crossover from the 5-minute time frame. Fantastic. Let's see. Hurst, I do like to use the 15-second, but as confluence with some 5 minutes or some higher time frame to follow the bigger trend. Okay, that's different than just using the 15-second. You're talking about framing the smaller time frames with big time frames. That's multi-time frame analysis. That's a bread and butter for what I do. I absolutely love that. Absolutely love that. So if you're using a 15-second maybe to manage your trades, in the 5-minute maybe to get you in, that's pretty much exactly what I do with my macro levels, my macro support and resistance zones. That's absolutely right. There we go. 15-second fight. Yeah, absolutely. 1 minute equal to 15 minutes. Let me see. Hey, Mew. Shane, what will be the ideal time frame to get high probable trades? Okay, that's the million-dollar question. What are your time frames? On Forex, you can make some money on this crossover during the London-US overlap. That's when the most liquidity is in the market for, say, those US dollar pairs. You could probably start with a 5-minute chart. I don't know that I would go any lower than that. We went to a 15-second chart because I wanted to show you guys how the trade worked. From a practical perspective, it's not scalping, but it's more of a position trading. 4-hour chart on Forex and 30-minute charts are pretty good. U.S. equities, during the U.S. session. I think a 5-minute chart's pretty good, 15 minutes pretty good, 30 minutes pretty good. Those are going to be pure day trades, though, and those are going to be things that you're going to need to let a little bit of time to breathe. You're not just going to be able to scalp them. Those trades are going to take time. But like a 5-minute chart on the U.S. equities and indices, and maybe during that first hour of trade, you're looking for crossovers. That can be pretty good. That can be pretty good because there's movement there. There's participation. So I would say that you got a lot of options there. Great question, Nohemu. Let me see. Nahom from Ethiopia. Well, welcome. Good to see you. All right, guys. Let's go ahead and talk a little bit about confirmation, and then we're going to go on the hunt for a higher probability trade than what we just took. I think we're going to be able to find one, too. I really do. We got some interesting movement here in the U.S. equities indices, and potentially we're going to be able to get one more trade, I hope. Don't ever hope. Don't let me catch you hoping. All right, here we go. Let's talk a little bit about confirmation. So, this is essentially what the pattern looks like on a sell for your 5813. So what does confirmation mean? Confirmation means, in technical analysis, confirmation refers to the use of an additional indicator or indicators to substantiate a trend by suggesting one indicator, or a trend of a suggested indicator. Now, since technical indicators are not perfect predictors of future price movements, they're not. They're all lagging. Every indicator on your chart is lagging. It can't help you predict anything. All it can do is it can help you set up your trade, your stop loss and your profit target and your entry point. Every trade has 3 points: entry point, profit target, stop loss. If you don't have those 3 things, even if you have your entry point, you know where you want to get in, at least mentally, if you know where you have to get out and where you want to be, that's fine. That means that your trade's complete. But when you say, well, I want to buy right now, but I don't know really when to cut it off or what I want out of it, then you don't have a trade. Every trade has 3 parts, guys. 3 parts. Remember this. Burn it. Don't get it tattooed on your arm, but definitely write some notes down. Entry point and your exit points. Entry point, profit target, stop loss. Every trade has to have that. If you do not have that, you do not have a trade. Indicators cannot help you set profit targets. A lot of folks believe they can, and if you're doing that, you're using Fibonacci expansions or something like that, then that's great. I'm not going to argue with you. If you're making money, that's fine. But the hardest thing to measure is follow through. So using a technical indicator to maybe set a level that you should be looking at, that's dependent on order flow and the market participation that price ever gets there. And those 2 things you just can't control. However, technical indicators can tell you where to get out at. And that's the most valuable part of them, in my view, getting us the entries and that stop loss. The rest of it, we have to start setting profit targets according to our own personal goals and our personalities. And I talked a lot about that this week. We had an ugly U.S. oil trade. It was ugly too, but it was a great teachable moment. All right. Since technical indicators are not perfect predictors of future price movements, a trader often feels more secure deciding to act on a signal if more than one indicator is sending the same signal. Interesting. So what are we going to use for a confirmation? We're going to use the Relative Strength Index, or RSI. RSI was developed by Wells Wilder Jr. back in the late 70s or early 80s. I don't know which, but this indicator is old. It's been around forever, and the reason why it's been around forever is because a lot of people find some functionality in it. It's a momentum oscillator. And what a momentum oscillator is something that tells us when the momentum is either hot in the market or it's drying up, whether a market's overbought or oversold essentially, or out of a state of equilibrium. Don't really need to know that, but if you want to, you can do it. All right, let's go ahead and take a look here. To add this to TradingView is relatively straightforward. Relative Strength Index. You just go down to R, I think. Relative Strength Index. Go ahead and give it a click. Now, what is important about the RSI here is that you understand the settings. I get this question a lot in the private messages over at How to Trade. More than happy to answer it, but it's always, what settings are you using for the RSI? I use the factory settings, like the default settings when your television comes or you buy a TV or a computer or your phone. It's got all the default settings. I leave it on default. This is what Wells Wilder Jr. intended. An RSI link, the periodicity is 14. Your length is 14. Your source is the close of each bar. Do not worry about the smoothing. Do not worry about the calculation. I like it not as a chart overlay. You can get it as a chart overlay. I like it as its own separate panel, its window. And you can see right there, there's your settings right above my picture. So how do you trade this thing? It's easy. When the market goes above 70, you're in overbought territory and you're looking to sell the market. When the when the RSI goes beneath 30, you're in oversold territory, you're looking to buy the market. Right now you can see on that we just caught this move and made a little bit of money on that crossover 15-second. Well, we backed off to a 5-minute chart, and you'll see on the 5-minute chart, nothing happening. We're right around 50. What does that tell us? It tells us that the market's flatlined. Now, why is that important? Take a look at this. This goes back to our discussion on fair value from early in the week. This area right in here, we're not in. We're not looking to trade this strategy then. We're not trading crossovers until what? Until the market's overbought or oversold. That's all there is to it. So you definitely would want to see that. You'd want to see something bigger at RSI here to get us involved. Above 70, we're going to want to sell. That means that we're going to want that 5 to cross under the 8 and close beneath all 3, and then we're going to go ahead and sell. When we're beneath the 30, then we're going to go ahead. We're in oversold territory. We're going to buy the market when we get the crossover, when the 5 crosses over the 8 and closes above all 3. That's really basic stuff, but it works. I mean, it really does. Let's go ahead and let me see. Hurst Horns, I'm sorry for spamming the chat with EMA talk. No, I couldn't read them all, but fantastic stuff. EMAs are fantastic. The 13th period EMA for me is everything. I mean, my charts don't really even have the 5 and the 8 on them. They have a 13, but the 13 for me is big. It's really big. It gives me an idea of whether we're bullish or bearish. It's also a great support or resistance level in and of itself. So you definitely want to do that. Let's see. I've got some more questions here. Let's see. Steve Francis, would you trade the indices outside normal trading hours? No, I wouldn't. No, I wouldn't scalp them now. I wouldn't scalp them. But if we're swing trading, yeah, you have to. You swing trade, you're probably in those trades a few days. But the U.S. indices outside of trading hours, no, sir. No, sir. Maybe short-term scalping after, like next week, I believe we have CPI, maybe right after a CPI or an NFP on maybe 1-minute time frames or something. Yeah, I would consider doing that just because my risk isn't going to be that big. But I'm not trading the U.S. indices during the overnight in London. I don't do that, and I'll show you why. Now, I'm not saying that you guys can't. I know a lot of you are in the UK, and you've got to trade when you're awake and you're during your trading hours. I get it. Believe me, I get it. But right here, see that this is a futures contract. You see that right there? That's opening bell, ding, ding. That's volume. This stuff right in here. No way. Right there's the British Open. That's the London Open right there, 1 a.m. my time. Look at that. That's rough. That's rough stuff. Now, you'll notice on a 30-minute chart, we haven't been overbought or oversold all day on this pair. When was the last time we were oversold? Back on the 7th of August, yesterday? Something like this. Right after that initial early day slam, what do you got there? You're in oversold territory. You're looking to buy. Look at that. You got the buy right there. Let's go ahead and just sort of recap this trade in hindsight, I guess. There's your buy. Where's your entry point at? This crossover doesn't form until this close. There's your entry. Where could your exit be? You got a couple options. You could put it right beneath that, or you could put it beneath the swing low. If you're beneath that swing low, what are you risking? A couple of 100 points. So you've got to get a move. You're working on it. Where would your profit target be potentially? Probably the top of market structure here wouldn't be a bad thing. Something like that. Is that a scalp? No. That's a true day trade, potentially a swing trade, because you took it yesterday. How's it look though? It doesn't look bad. It doesn't look bad. I mean, I always say that if you want to improve your trading, you'll back off from those really short time frames to longer time frames. Gordon Williams, how you doing, Gordon? Help? Am I reading that right? Help? There's two ways that people lose a lot of money trading crossovers. Number one, they trade when they shouldn't be trading them. And we made a video on that. 3 times you shouldn't be trading them. Let's go ahead and look. EMA crossover strategy traps, 3 times you should never trade them. That video right there can keep you out of trouble with it. The problem that you have is when you don't get a move. And so a couple of things happen on extremely short. Oh, hello. Yeah. How you doing, Gordon? It said help. You didn't have the 0. You had the P. when you're in the market and you're trading a 15-minute chart, or not really a 15-minute, but like a 5-minute chart or a 1-minute chart, you tend to run into periods of time where everything dries up, where you don't get the participation, the volatility. Even during the U.S. trading day, it's common right around now to typically see a lull in the action. That's one of the reasons why we stream a lot during this period, because it gives me an opportunity to see the open and game plan for what's coming and recap what just happened. That gives us a good chance to really trade in a forward-looking fashion. The reason why we do that now is because typically there's not much movement around this time of day. We're getting some action today, though. So when people are trading a 1-minute chart, or I knew a trader that traded a 2-minute chart religiously, and I had never even thought about doing a 2-minute chart, but 2-minute chart, right? And really struggled having success trying to catch these crossover runners. And I said, back off your time frame. Well, I can't because the risk is too big then. The stop losses are too big. And I'd say, take your leverage down. Well, what do you mean? Well, if you're trading a standard lot of Euro USD and you can only afford like an 8-pip stop loss, what you're trying to do is be very, very tight. And the only way to find those stop losses that are 8 pips or whatever is, using technical indicators anyways, is to go down to a real small time frame. And that's sort of the trap of the small time frame trading, is everybody wants to scalp and everybody wants, you feel like you guys want to work. I mean, that's why you're here. That's why you're watching the webinar, is you want to learn how to do something so you can go work and make money. And a lot of us believe that if we're not in front of the computer clicking buttons all day, we aren't working. And that couldn't be further from the truth. You're working when you're strategizing. You're working through your analytics, setting up your key levels. You're working when you're building risk versus rewards in your head. You're working when you're staying out when you shouldn't be in. That's huge. And so the biggest challenge people have is they get into the 1-minute chart and they go, well, I'm going to sit here. I'm going to make 25 trades a day, and I'm going to eke out my $200 or $300 a day profit. And then I'm going to go home, job well done, get up and do it all over again. The problem is when you're trading that high volumes, those big numbers of trades, the drawdowns can be extreme because you're going to take a lot of losses. And the reason why you're going to take a lot of losses is because your stop losses are way too tight. Can it be done? Absolutely, it can be done. High-frequency firms do it all the time. They're trading on microsecond time frames, but they have the technology and they have the cash to do it. I'm not going to say everybody on the stream doesn't have those things, but by and large, retail traders can't compete in milliseconds. So what we've got to do is we've got to say, okay, what do I want to get out of this? What do I have to get out of this for this to be a profitable thing and a good thing for me to be doing? You need to you have a number in your head. You need to understand what you need to do to make it. And then you have to take a look at your resources and say, okay, I have X amount of money and X amount of time to trade. How can I use this 5-8-13 to help me reach my goals and my expectations? And from there, you build your time frame and you build the markets you trade. So to answer your question, I was just asked, Shane, do you trade the U.S. indices outside of the U.S. market? No, I don't. But I'm in the U.S., so it's easier for me. I mean, it's easier. I'm on the West Coast, not really on the West Coast, but I'm in the Mountain Time Zone. So I'm still 2 hours behind the market open. So it's an early morning for me. Whereas I envy the guys on the East Coast, the ladies and gentlemen on the East Coast. You guys roll out of bed, market's open at 9:30, have a cup of coffee. You've already had breakfast and a cup of coffee and been to the gym by then. I feel bad for the folks in Hawaii. They got to wake up in the middle of the night. So that's just sort of the way that it is. You got to be able to trade when you need to trade, and that's going to depend on where you live. Time frames. You also, if you don't have much time to trade, you got to adjust your time frame. Personally, I've talked to all kinds of traders, guys, all kinds, from extreme beginners to professionals to folks that work full-time and trade. The folks that work full-time and trade, they usually do one of two things. They become swing traders pretty quickly. Most of them, they're looking at 4 hours and dailies, and they're taking positions and just sort of trying to hit and make the money that way. That's a real strong way to do it, but it does take more money to do it. I'm not going to lie to you. The second kind that work full-time and supplement, those folks allocate, whatever they have time-wise. And that could be trading an hour before going to work in the morning, trading on their lunch break, trading after. I know folks that drive semis that are truck drivers that have their phones and trade from their phones while they're driving. I can't say that because they're driving. They shouldn't be on their phone, but they pull off and they hit the weigh station or they hit a rest spot and they pull off and they place their trades and they monitor their trades while they're driving down the road. It's not that hard to do. It's not. I mean, it's not like you're sitting there and you have to be glued to these screens. Once you get your setup, once you know where you have to get out at, where you're in and where you're out, I mean, the thing should take care of itself, especially on a crossover. Now, discretionary trading is different. If you're going to be a pure discretionary trader, you need to say, okay, when's the absolute best time for me to be in the market? And that's when the market's at its deepest and when it's moving. So for me personally, it's about 6 a.m. to 6:30 in the morning my time till about 9:30 a.m. to 10. And that depends on news releases and all different things. But that 3 hours, typically between 7 and 10 a.m. my time, that's when I need to be switched on and in the saddle. I know that for a fact. I've been doing this long enough. Now, I have that luxury. I can sit here and do that. And a lot of you are like, man, Shane, that's 3 hours a day. I got to go to work. I got kids. I got to commute. I got a lot of things, and I get it. So a lot of folks here in the U.S. that work a full schedule, what they'll do is they'll focus and say, okay, I'm going to get good at trading the Asian Open. I'm going to trade the Tokyo Open, and I'm going to focus on assets that are going to be moving during that period. A lot of traders are trading Nikkei, trading Nikkei futures. They're trading Nikkei over the counter. They're trading Nikkei stocks. They're also trading yen, all things yen. That's something that someone who works a full-time slate can also come home and do here in the United States. So it's going to be different for you no matter what your schedule is. What I'm saying is your time frame, don't just run to those 1-minute charts because, okay, I got 30 minutes to trade right now. That's not always the way. It's not always the way. So I would think about that. Multiple time frames are pretty good, though. All right, guys, let's go ahead and let's see if we can. I've been watching this while I've been talking, and believe me, there's a method for the madness. It's like, do we have any more trades? I'm seeing slow action. All right, let's take a look at gold. 30-minute chart for gold. Our RSI is what? Dead. It's right around 50. That means what? The market's roughly in balance. That shouldn't surprise us. We've been looking at gold every day this week. Okay. Let's take this down to a 5-minute chart. Is there any movement at all here? Anything that could get us in the market? No. It's flatlined. Let's see if is there anything moving right now? Dollar yen, 5-minute chart, dollar yen. Nothing. We haven't been really out of whack since right there, and we didn't get the crossover until right up in here. Got stopped out on that one too. Didn't work. 5-minute chart. When did we get stopped though? It would have been right in here before the U.S. Open. And then what happens? U.S. session, London U.S. overlap kicks in. Look at your volume sort of go up and you get swept out. That's life. That's why timing is everything with this type of stuff. Dollar yen. Let's go to a 1 minute. We're moving a little bit. Let's go down to a 1 minute. Potentially, if we get into oversold territory and then get a rebound and a crossover, we could take something. Would I do it right now? I don't know. I don't know if it's the best idea. That's for sure. All right, let me see. We got a question here from Yes Sir. Which is more ideal for identifying volume in the market, the volume indicator or would the average true range be better? I'm having a small issue recognizing when volume is picking up for my orb trades. It sounds like the only time I have to trade is the Tokyo session. Well, yeah, I mean, it just depends on what you want to do. I mean, hey, listen, we've got tech though, and it depends on your job. I mean, there's folks out there, like I said, that are driving trucks, that have their charts on their phone, and they know what trades they're looking at before they go off to a day's work. And when those trades line up, their alerts go off and they make the trade. That's the beauty of these things. I mean, if you're a swing trader or a pure day trader, you can do it. You could do it and work at the same time. It's just mentally, can you handle it? That's tough. Tokyo, if you wanted to trade, and focus on the Tokyo session when you can give it all your interest, then yeah. Yeah, the yen ain't moving hardly any good movement or setups for me this week. Yeah, it's not really moving right now for me either. That's for sure. Let me see, Patrick. Guys, I can't see your broker. I've been searching Play Store. Yeah, it's just switchmarkets.com. Go here, head on over here. Head on over there, Patrick. They'll get you set up. All right, guys. We don't have it. We don't have really any trades that I'm looking at right here. I was asked early in the stream to go ahead and give you my opinion. If you want to throw a market out there, I'll tell you what. I'll take 3 markets. We've been going long, but I'm going to go ahead and we'll hit. Really, the key news event today is going to be Russia-Ukraine, into the Russia war. Let's see if there's any deals here. All right, Trump-Putin talks unlikely to bring rapid end to Ukraine war. Zelensky sidelined from Ukraine war talks. So they're talking about having a meeting here. Don't be surprised if you have big news over the weekend. That could be a major market driver here for U.S. oil. Definitely WTI oil, Brent crude. Those have sort of been bearish lately. You've definitely got a big bearish move in natural gas, which is now beneath 3. So I would be aware of that. Those are going to be movers and shakers, especially if you see a Russia-Ukraine peace deal. Let's see, Gordon, I lost this week. Yeah, this was a challenging week. There wasn't much going on. Next week will be better. Stay alive to fight another day, Gordon. Next week's better. Save your money for today. Come back Monday ready. All right, I got a question on gold, and then I'll go ahead and sign off. The question was for my personal analysis. I'm more than happy to do that. I put a trade idea out a little bit early on the FTSE. Of course, the trade rebounded, but weekly Fibonacci level right down there around 9,000. We're looking at 9,000 longs, somewhere right in this zone. Check out the daily trade idea there. I like buying into the FTSE here. I think this overreaction from the pound is short-lived. But if we do get a sell-off maybe early next week, that could be a fantastic level as well. All right, let's go ahead and go to spot gold. You can see right here, what do we got on the weekly? This is sort of that ascending triangle that I've been talking about. Is the breakout on? Not quite. Trend lines are tough, guys. Remember, all you need for a trend line is 2 touch points. In this case, we could say that potentially we have 3. I would count that middle as a touch point. So you'd be going there from your all-time highs right there to this rally to 34.50, and then right there you tested something right around 34.38. So we're sort of closing in on another test of that upper sort of down trend line. I don't know what you'd call that. I call it the top of my triangle, but that would be the breakout zone. If this is going to happen, that's where it'll happen at. Remember, our 920, if you guys, I don't think I have a 920 up still. The 920, if you have that, we're on a buy on gold. So right here, if we're looking at this on a weekly time frame, definitely we've had a bullish week. Shouldn't surprise anybody. A lot of geopolitical talk. It's going to be tough. 3,500 probably would be a legitimate topside target. The fun really starts, though, when we finally do break out. Once this triangle breaks and we run to 3,500-ish, then we get established above there. Then I can start making incredibly bold market calls like 3,750 or 4,000. We can start making those calls. And, that a lot of that depends on, does the Fed cut interest rates? If they do, if they decide to go quantitative easing, then you're going to start to see a real big issue with the commodity prices because they will rally, especially gold, because the idea will be that inflation is going to persist and you're going to have a lower dollar. More dollars in the system mean it's going to take more dollars to buy gold. And that's just sort of intuitive. The fun really starts once we break over 3,500, and then we can start talking about all kinds of strategies and ways to scalp to the long, and most of them are going to be winners because there's going to be bidders up there. But we've got to break first. Right now, we're sort of in that incubation stage where the market's just sort of simmering. It's like a fine stew or maybe like a nice beef Wellington. It's just starting to cook inside there, and you're getting ready to cut that thing. And once we cut it, this thing blows high. Well, it hasn't happened yet. And I'm not saying that it's going to happen, but I'm pretty confident that we're going to see 3,500 again, probably later this month. It could be, guys, it could be as early as Monday or Tuesday, especially if this Russia-Ukraine deal maybe falls apart, maybe prompts an escalation, then anything can happen. So we're watching this closely. I think that's a pretty good move there. I've been putting up these macro levels forever. I don't really think they're doing anybody any good. The biggest thing to do is just remember 3,500 is up there, and we definitely are bullish. A couple of things that we need to understand about the monthly. This is a bullish flag. I don't know that I've ever seen one like this on the monthly, at least not for a long time. I mean, look, you're hard pressed. You're going back to October of 2011. You haven't seen a bullish flag like this. I mean, this is a bullish flag, guys. This is a bullish flag. This type of formation, or a bullish pennant, whatever you want to call it. You guys call it whatever you want, whatever you're comfortable with. A lot of times in trading, the nomenclature and the verbiage is people just get carried away. They call things, try to make special names and try to sound smart. I'm not into being smart. I'm not. I mean, we're into making money. That's why we're here. We don't have to be rocket scientists to make money in these markets. We don't. But we have to know what we know. And I know that right there is a bullish pennant. What happens to pennants? They break. When this thing breaks, this is the type of move that, let's say I'm an institutional player. I mean, realistically, you've got a long-legged doji and you've got 2 inverted hammers in a row on a monthly chart. What does that tell us? Typically, the inverted hammers are reversal signals. If you get the reversal, we're not getting the reversal. I would be watching last month's high very closely up there at 34.38. What was that? Top of our trend line, our weekly trend line. See how it all fits together, don't you? 3,500 is the key level in this market. Don't forget it. Have it on every one of your charts. You're going to want to know where that's at, especially even if you're trading a 1-minute chart. You can bet that participation volume will spike up around 3,500. It absolutely will. So something like that's going to be big. In my view, if things go a certain way, let's say you have war escalation and they can't stop the Russia-Ukraine situation, or let's say Israel-Hamas goes big, or there's more action in Iran, and let's say the Fed during this time is cutting interest rates, that's all going to spell crisis. 4,000. This will be the launch point for it. Now, the problem for us is that takes a lot of money to trade that. You try to break it, and you got to hold this position for, how many months. Can't really do it unless you have a lot of money and really low swap fees. So you're sort of sunk. But I think that everybody can really see what's happening in this market right now, and it's no secret. It's no secret. So the best thing for us to do as retail is to wait for this thing to break and then buy pullbacks. We could also scalp to the short in front of 3,500, just betting on a little bit of a fight there, which we will get. But big picture, if you get rate cuts and you get a flare up of global tensions, then we'll go to 4,000. And I'm one of those people that believes it'll happen fast. Once this, as we call this containment. You guys are American football fans. You ever watch that? You got defensive ends. Their job is outside contain, typically force the play up the middle where all your defenders are. Well, once this thing breaks contain, 3,500 is the defender. Those are the linebackers. Once those guys are gone, it's just you and the safety and probably a touchdown up there at 4,000. So I would be very, very careful being short up in here. We'll see. Now, that's the bullish scenario. The bearish scenario, and I'm not saying this just to cover my bases, but let's say Jay Powell doesn't raise interest rates, and let's say there's a peace deal announced today in Israel, Hamas, and Russia. What could happen? You bet. Now, it's not that we're going to be bearish from up here, far from it, but what we're going to do is we're going to look at buying pullbacks there, and that could really give us an opportunity to make some good money. So gold has been in a tough place for the last 60 days. I've lost money trading gold last month in July. July was a loser for me. Took a big loss in there on a liquidity sweep that was terrible. Came out of nowhere. But it will be good again. It was very, 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 very good. Very good through here. Very good. So we'll see what happens. All right, everybody. I'm going to go ahead and sign off here for today. Let me see. Angelique, I like the orb. I like the orb too. The orb's great. We're actually our views on that channel really fluctuate whatever YouTube does with them. But the orb is good. Price action's good. I understand if you don't like the EMA crossovers, they're not for everybody. Personally, I like key levels and horizontal support and resistance. But to each their own. A lot of people really love the crossovers, and they're welcome to them. That's for sure. Let me see. Hey, Amy, please review GC and XAU price difference. It's astronomically unusual. Yeah, that's actually a great point. Thanks for bringing that up. Well, let's okay, this will be the last thing. I've been going for about an hour, but that's okay. It's Friday. Let's go ahead and pull up CME group here. So when you go over to this website right here, this is the CME group, and this will give you a good look at the futures contracts that you need to be sort of jacked into or dialed into. Let's say if you're trading spot gold, it always helps to know what the futures are doing. So right here, you're going to go to the GC, the gold contract. Go ahead and give that a click. And what you're going to want to do here is you're going to want to go to full-size gold futures. That's what I trade. You can trade micros too. Maybe we'll make a video on that, tell you exactly how to do that. You're welcome, Lita. Absolutely. So this GC, this is your gold futures. Now, the biggest thing to remember about futures contracts is the one with all the volume on it is the front month. So right now, there's a little bit of folks. There's some folks trading August 6,300, in September, in October, in November, but where everybody's trading is December. So to answer your question, Hamu, why is the GC and XAU price so disconnected? Right now, we're looking at GC, which is about 34.90, and these are on delay. I got live prices over there. So 34.90.7, something like that, about 1.0%. And then you've got your spot gold is up there at 33.97. So there's about $100 spread there. Now, this is the reason why. The institutional traders and the big traders have already flipped to trading December gold. Now you're saying, Shane, why aren't they trading November, October, or September? Because typically they don't trade those. Gold is one of those that's a very, very weird. It's a very weird contract because, like, let's go right here to our contract specs, and let's go to listed contracts. Okay, monthly contracts listed for 26 consecutive months and any June and December in the nearest 72. So what that means is they are listing monthly contracts for gold. The problem is nobody's trading them. Okay, so if nobody's trading them, then you've got to be in a position to say, okay, what exactly does all of it mean? And the answer is real simple. The institutions are balancing their books. They're balancing their books. And you can see right here the settlements. These are giving you the settled volumes at the end of each day. We'll take a look at this right here. December, 249,000 for yesterday, contracts. Take a look at where else they're trading in February, okay, in April. So what are going to be the contracts next year? You're going to trade December from now until expiry, essentially, and then you're going to roll to that February contract. What's February trading at? 34.60. All right, that's interesting. What's this one trading at? Or what was it yesterday? Somewhere in there? 34.83, 35.09. What does all that tell us? 3,500. By the end of the year, 3,500. That's why the disconnect is there, though. The institutions are already pricing the December contract for GC. So typically August is a tricky time of year to be trading gold. But that rollover right now, I mean, we're going to get a move. We are going to get a move. And did that 920 crossover get us in on the action? Maybe. Maybe not. All right, everybody, I'm going to go ahead and sign off. I think we covered plenty today. I hope you enjoyed the workshop. We'll be back next week. Check the live schedule. That'll be up in the How to Trade trading room momentarily, probably in the next hour or so. I'll put that out. We also had a trade idea for the FTSE. You're going to want to check that out as well. If any questions at all, be sure to reach out to me. I'm more than happy to get back to you personally. You can either do it on the YouTube channels or over at How to Trade. Send me a private message, and I'm more than happy to have a private dialogue, answer whatever questions you'd like. All right, everybody, I'm going to go ahead and sign off. Bobby Bob, thank you, Coach. For me, it was No Donation Friday. Absolutely fantastic. Put some of that money in your pocket and have a great weekend. We'll be back ready to go on Monday. All right, guys. Hey, Mew, thanks for the details about futures. Very informative. Well, I know futures. I almost, so you guys have been trading Forex and spot things and CFDs. The one thing I've never traded is a CFD, and the reason why is we don't have them in the United States. But I know futures, and I've been trading futures for a long time. So that's what I do. All right, guys, I'm going to go ahead and sign off. You have a fantastic weekend. Let's see, Alan. Shane, what do you think about the dollar-yen 4-hour? Okay, right when I'm out, they pull me back in. All right, let's do it. All right, what do you want here? Let's see, the crossover. 5.813 or 920? Let's go to the 920. Give me the 920 here. That gold one's got potential right there. I really like that. Okay, here's our crossover. Daily time frame, nothing. It's just off the top of my head right here. That was similar to I cannot remember who said it, but they were trading the yen. I believe it was Yes Sir. I was trading it saying, yeah, we didn't get any moves out of the yen this week. No, you didn't. Look at that. That's ugly market structure on a daily. That is not what we've grown accustomed to out of the dollar yen. So let's go ahead and take this down to a 4-hour chart. Just by looking at that daily, I can tell you it's a bit problematic, but okay, it's setting up. All right. So the first thing you're looking at here is getting a setup. Maybe in the next 4 hours, maybe you get the gold bar, the crossover, and you're in great shape. The RSI is no help here, but you don't need it on a 4-hour chart for the Forex. So I would forget about that. As far as this goes, it looks like a buy. So your stop loss is going to be down here, somewhere right around 146.60. So it's roughly about a 100 pip trade. Okay, so that's going to be probably a swing trade or a position trade. Let's go back to the daily though and see what we could be looking at as far as a top side. All right, so we would be looking really at 148.26 as being potential robust resistance. Is it that good? A couple of ways to approach this. You can wait for the crossover and buy it immediately. That's our rules. That's our according to Hoyle rules. The problem with that is if you're up in here, Maybe it's 147, 147.71. We've got big time resistance up there at 148.26. So that's 50 pips, which is fine. There's a couple things you can do. You could either just risk 50 to win 50. You could go beneath your trigger bar there and make that your stop loss and try to get a runner up there somewhere right around, maybe 148.19, something like that. You could try to do that. There's not much room there until we get to that resistance, though. Is it a good position, though? It could be a good position. And if you're going to take a position trade and look to get, the big winner, to get something to trade maybe back up there to 150 or something, there's nothing wrong with that. But what you need to do is start cutting into that chain right in there, and that's where you get the big runners. So if you're going to do that, just understand it's a higher risk trade because there is big time resistance there. But is this market trending? I don't think it's not really. I don't consider it a trend. I mean, yeah, those two bars are huge, and we went down a little further. But since then, I mean, we've traded in a phone booth, so that it is feasible that we would break out north. Just be aware of those. Be aware of that first resistance line. I think life will be pretty easy in here. I really do. That'll be pretty easy until you get up in there, and then that's where the fight will start. Just be ready for it if you take it. All right, guys, I've gone way too long. We're an hour deep in this thing. I want to thank you for joining me today. Have a fantastic weekend. We'll be back next week with, a bunch of stuff. So come on back and see me. All right, guys, take it easy. Have a fantastic weekend. Trade the action well, and we'll talk soon. See ya.